Okay, let's get into the stock market technical analysis. We're going to go through the broad charts, look at these FANG stocks, and just point out a couple things I'm seeing in the market. So guys, if you're finding value in the content, please drop me a thumbs up. I do appreciate it. Let's get into it. Triple Qs. So for the most part, the entire strength in the rally continues to be just really in just a handful of stocks. It's the large cap tech stocks. If I flip over to my heat map, my S&P 500 heat map, you can see pretty much it's Microsoft, Nvidia, Google, Amazon, Tesla a little bit, but mostly it's just 3 or 4 stocks is really what's kind of holding the market up. It's not really necessarily rallying the market, but it's kind of holding it up. If I look at the equal weighted triple Qs, you'll see here that triple Qs is kind of popping higher, and we'll come back to that here in a second. And then the equal weighted triple Qs is actually down 0.5% today. So for the most part, broad-based tech is selling off, but then you have the large cap techs that are rallying. If I look at the S&P 500, the SPY, you'll see it's actually down. It's really gone nowhere for the last 6-7 weeks, just flat. And then if I look at the equal weighted S&P 500, you'll see that it's actually trending down, okay, like that. So, and that's down almost 1% today. So in general, the broad market is actually selling off. And then when you just apply the weighting the weighting of the tech stocks, the large cap tech stocks, then it's what's kind of keeping the market at least stable, keeping it up. But the broad-based market is selling off. Most stocks are selling off. That's what this is basically telling you. And then there's just a handful that are basically rallying. So back to the triple Qs, because again, these are the stocks that have basically been rallying. So we'll look at that. Triple Qs, again, it's really been just kind of like death by 1,000 cuts, basically, but we're just continuing to wedge into this bearish rising wedge. The price action's really compressed now. I mean, there's really no volatility for the most part. We're just kind of inching higher ever so slightly every day with really limited volatility. So I'm expecting there to be a volatility event. Now, these bearish rising wedges, they can do one of two things. They typically resolve to the downside, and that's usually what's going to happen, especially with this large negative divergence. I'd put a very high probability that these will break to the downside. However, sometimes what these things do is really a kind of a final stop out, or a final stop raid, basically, is they'll break these to the upside like this, run them up, and then reverse them hard. Okay, so that is completely possible. I'm looking at the price action. If I get down to the hourly chart here, you'll see that they are starting to look like they're starting to break it to the upside like that. And so, yeah, that might be what they want to do. And this, if that's the case, this could run, this could kind of spike up, probably run up to this former reaction high, which is about this area, about 334 or 33. So if you're not, if you don't really want to ride out that move up, then you could stop out, basically. If you start to see this continue to rise, you could stop out. And then one way to play it, because I still put really high odds in the fact that this negative divergence remains intact and this is a bearish rising wedge pattern, I put really good odds that we're going to break to the downside in the future. You could wait for a break, kind of a reversal candle. Wait for this pattern here. If it's going to run up, wait for it to break back down and break below this former trend line. That would be your next sell signal, and that would likely usher in pretty impulsive selling because, again, this has been a pattern that's been in play for quite a while. And so we'll just look at that. That's possibly one way to do it. Another way to handle that is to stop out in increments, maybe not stop out all at once, but stop out in increments. So that's something to look at. Now, if you look at that, if you look at the hourly, you can see they keep kind of playing with this wedge here. They just hit resistance, and so the daily close, I think, is going to be very telling how this wants to actually play out. So keep an eye on that. Again, I have put very good odds, pretty good probability that we break to the downside, but I can't say that they're not going to play that game and run that, run a bunch of stops The pattern's so obvious now that usually when something's so obvious, they'll kind of, they have, when I say they, market makers, they have large money, they can move around, they can just run a bunch of stops and take the positions and then reverse it hard. So that's really my thoughts on this. I see them possibly doing that move, and you can see they are buying it today. It's starting to kind of break out a little bit of this wedge. The day's not over. This is a daily chart, but yeah, that's one way to look at that. So let's look at the components of this, and really it just comes down to the FANG stocks. So Amazon. All right, Amazon's rallying today. It's running into my downtrend line, but again, I've never had a lot of confidence in this downtrend line because of this right here, that price action. I have to kind of, I had to kind of cut through that a little bit in order to make a data point right there. So I only have 2 data points. It's just not the cleanest downtrend line. I've never had a lot of confidence. The island reversal candle right here, all right, that's been an island reversal. Today you can see we're trading above it as of right now. This is a daily chart. So a daily close above this candle, really a daily close above the high, negates that as a reversal candle. So that's going to be something that's going to be a new development if we get it. Now we have, several hours, and they're just kind of trading it right slightly above. So again, we'll see how, how this plays out. Maybe we get a hard reversal. Maybe there's some news event that comes out and they start to sell it down. But again, a daily close on Amazon, really above 113.15 or so, would negate this as a reversal candle, and it really it starts to put into question some of the bearish outlook on Amazon. We still have a downtrend, but again, the downtrend is not very defined, not very well defined. So that's one thing I'll be watching. All right, watching for a daily close on Amazon above that former candle. If we don't get it, and maybe they start to sell this off, we get a daily close back below this, then it still holds up as a reversal candle. And it just tells me that this is stop rate action. They're just popping it above, running stops, and then it's going to reverse soon. So that's what I say on that one. Also, one thing that's kind of a development as of right now on Amazon, which we have not had in the past, doesn't mean it's a sell signal, but we are making a slightly higher high from that former candle, intraday high, and it is divergence as of now. Okay, so you'll see here, there it is, negative divergence. We now have a divergent high. We haven't had that in Amazon because we've had this candle, this reversal candle, but we haven't made a new higher high in price. That was a lower high. We're now making higher highs in price, and we do have that divergence. Now, this divergence isn't enough to go off of to say that this is going to be, this is the top in Amazon. It is just merely conditions that tell me that the sellers should show up. So that's one thing I'll look for is, I'm really looking for a reversal right here and now, or maybe tomorrow very soon. But I would, I don't really want to see this closing above that candle. If it closes above, then it can just continue to rally. And if it continues to rally, you're not going to have divergence. It's going to burn through it. It's going to, we're going to look like this and make a new higher high, and there won't be divergence. So that's why divergence isn't enough to basically, it's just one element of an analysis, not enough to go off of. So, all right, that is that one. Google. All right, we'll go down to this one. Google. Google's been pretty strong. Basically, we have this one we had some divergence right here. Barely, but it did have divergence, and you can see they gapped it up, and so far it's running. All right, so we're much higher from here. We're going to burn through the divergence. All right, it's still there, technically still just hanging on to the divergence, but much higher. We're going to burn through it. So this one you'd want to see the sellers really step in pretty soon, or it's we're starting to break some of the bearish technicals on this one. Not broken yet, so we'll see how the day closes. Okay, Microsoft. So Microsoft is, look at the daily chart. We've got big resistance right here at about 315.43. I noticed in the headlines today they're pumping the AI thing. I mean, in general, I've seen the kind of a consistency around that. There's a lot of usage of the keyword AI with a lot of these reports and things that, that the CEOs are interested in talking about. Again, the algorithms, the algos, they look for keywords, all right, in reports and stuff, and they're triggered off a keyword. So that's kind of the pump game that you'll see. Microsoft's really there's not a whole lot changed. It's really just, since earnings, this has just been grinding higher. Just, it looks like people are stopping out. It doesn't look like there's necessarily impulsive buying. It looks like people are stopping out, but we'll see. 315.29 on that one. You still have negative divergence here on the PPO and the RSI. Zooming in on the PPO, you can see we even got a bearish PPO crossover right there. So I think Microsoft's run its course. Doesn't mean it has to just, we can grind higher for a few more days, but there's not a lot of impulsive buying here. It's literally just kind of ticking higher with that divergence. So we'll see. Again, these FANG stocks, these large cap tech stocks, they all kind of run together. So if you start to see some bullish developments in the other FANG stocks, then, this could start to show some more bullish developments as well. But as of right now, this one still looks like it's got, negative divergence. It's got a, it did have a bearish rising wedge pattern right here. Okay, you have that. We've popped to the upside for the last few weeks after earnings, but it's not going, we're still kind of just trading slightly below resistance right there, which is that former high. You can see you had if I roll out, you had a reaction there, you had a reaction there. Okay, so we're trading back into that resistance. So a daily close, if everyone's interested on, what changes the technical picture on this one, I think a daily close really above this level right here. It's about 315-ish, let's call it 315, 315.50, 316. You get a daily close right above that former reaction high. And that's going to start to change the technical picture. So we'll keep an eye on that. And then also, obviously, if you burn through the divergence down here, that changes the technical picture as well. As of now, there's really no change on this stock over the last, really since earnings. This is going back, we're trading. It's been, just kind of a grind on these things for the last 6-7 weeks now. The technicals have remained bearish, and there's really been no change. They're not going down, but they are going up for sure. Some more than others, but in general, it's just kind of this grind higher. All right, so that's Microsoft. Let's look at Apple. That's the big dog. Apple, really since last week, and all of this week, we're really just kind of going nowhere. There's no change here. Technically, you still have negative divergence. If I look at the PPO, you can see starting to get a bearish PPO crossover again right there. And this is just divergent high price action. Okay, so you pop up, you trade, up in a divergent high for a week and a half, 2 weeks. You start to roll over, and then price starts to follow to the downside. If Apple starts to sell off, it's likely going to drag the rest of the stocks, the FANG stocks, down. And Apple recently has been, has actually been kind of weak. They've been one of the weaker ones. Now they're not selling off, but they're just not really moving up. They're just kind of stuck sideways. So we'll see on that one. I don't see any technical change on that. Oh, and then going back to Apple real quick, if you look at the daily, again, former reaction high right there. Okay, it's right in about 174.50 up to about 176.40, but 174.50 was the daily close, and we have not had a daily close above that. All right, it's right there. So we tagged it once, we've been trading up into it, but there's been no daily close. So there's no technical change in Apple. All right, and then Meta. Again, gapped up after earnings. You had this bearish rising wedge, gapped up. I'm sure all the stops, all the shorts have been run, but we're back down into the wedge. All right, you can see here, if I just roll, there's the top of the wedge, and we're basically trading right on resistance of that wedge. So there's literally no technical change either on that one. And this one's basically back within the wedge and right at the apex. So it's time to break out or break down. The negative divergence, the bearish rising wedge, it all tells me that the breakdown is coming very soon. And again, I still continue to lean that way. that we're going to get probably a pretty impulsive breakdown, especially with how floaty the price action's been on these FANG stocks, where it's just kind of been ticking higher. Shorts have been stopping out, and there's fewer and fewer in shorts. Every day that goes on like this, you're getting less and less shorts. They're starting to cover, and that's kind of what it looks like is going on. So by the time you actually get a big move, there's not going to be a lot of short sellers in there, and that's what creates those large moves. But again, one way to play it, if you're uncomfortable with kind of taking on losses day in and day out, because that's the nature of, especially shorting a lot of the time, when you have a big move that looks to be set up and you have the negative divergence and everything's there, usually you'll have many days, 9 days out of 10, where you kind of take on incremental losses. And then the 10th day makes up for all those losses plus a lot more. Okay, that's short selling essentially. You'll have we're gonna get, if I'm right about the move to the downside, we're gonna get a big gap down in this one. It's gonna wipe out all these losses that's been ticking up, and quite possibly a lot more, all in a single day. And then going back to the triple Qs, there you are. You can see they're kind of starting to pop it above this bearish wedge. Again, to me, looks like a stop rate, but this could continue a little higher from here. So one way to do it is to maybe stop out on some of your position and look to just get back short if you see the breakdown. Not an area I want to get long, okay? The time to get long on this is not here and now. We have a negative divergence. We have a bearish rising wedge. If they want to pop it up and you get FOMO and you want to chase, it's a very high risk area to go long, okay? If you're interested in going long, wait for a pullback, all right? Wait for a pullback. There will be a pullback. It's just the nature of, the markets. And you can buy at support, all right? Maybe down here, this looks like a good area. About 293 would be an area to potentially buy if you're bullish. I would not want to be long on a move up right here. So that's kind of the analysis on the FANG stocks. Okay, the other one that's been, running is Nvidia. So here's what I'm thinking on Nvidia. So the former reaction high, let me kind of grab my tool, zoom in right here, is right there, all right? It's about 290, 291-ish. It's about 290, 291. All right, we are above that right now. If I zoom out, you can see just, they're starting to break above it now. A daily close above this area, if they don't sell this and reverse this soon, and we get a daily close up here, then that changes some, it kind of changes some of the technicals. Now, yes, we do have the negative divergence. It's a big negative divergence. It's been building for a while, so I would think there's a reversal very soon, but divergence isn't enough to just go off of when you start breaking resistance levels. So if you break that former reaction high, then it's all-time highs, like right in here, the former high. I don't know if we'll make new all-time highs. We might put in a double top, but that would probably set Nvidia up for a move up to about 336.78, 337, making another test of the highs. I don't want to ride that out short, if that's going to take place. So, because that would be a move from where we're at now. That'd be about another 10 to 15%. So, I don't want to ride that short. So I'll likely stop out if we get the daily close above that 291-ish. And as of right now, we're above it. Doesn't mean we'll close the day above it. We'll see, but we're above it now. So keep an eye on that. But I'd look to probably be stopping out, and then we'll just look to move on, or look to get short on this one on a double top. We'll look for other signs. The divergence is there, so it's definitely telling me we're going to get a move to the downside, but where's that move come from? If we're breaking resistance, then it's likely going to come from the next resistance level, which is up there. So that's my analysis on that one. Wheat. So here's the wheat futures. No change, okay? This is a bullish falling wedge. We just have to be patient, Again, bullish falling wedge, big bullish divergence on both momentum indicators. We had a little false breakdown right here, and it recovered. And yesterday, nice impulsive move higher. selling down a little bit today, but still constructive. Okay, as long as you, I think you start to build higher highs. You're going to have sell down days, but I think you're going to start to build higher highs. Ultimately, I do believe we're going to break out of this wedge and move to the upside for a pretty strong move. The major target of this move is really setting us up for something like, something like a move up to former reaction highs right in here at about 936, it looks like. So yeah, that's a sizable move. From where we're at right now, that's potentially a 50% gain on that one. So I still like this one for a long, still looks good. Gold mining stocks starting to break down today. Breaking former support. Day is not closed yet, but that so far is a breakdown and a sell signal. So to me, that sets gold up for a move down to about, or the gold miners down to about 30.75 for the next level of support, and possibly lower. I'm not, this divergence right here, this negative divergence looks like it's starting to play out. So yeah, lower prices in gold and gold miners. I'm not really interested in these right now. And if you look at the flipping over to interest rates, because it's all tied in together, interest rates, the dollar, gold, and tech stocks all kind of tied in together. Interest rates are rising today. Nothing that's really major, but definitely up today. So we'll see. Watch this TNX. If this has another move higher, all right, and starts to make it look like it's going to make another leg higher, that's going to be bearish for tech stocks. So you'll likely see those tech stocks selling off if you see the interest rates rising. And then the dollar, you'll see here the dollar starting to slightly rise. Potential breakout. I have a reaction, and then starting to kind of break out right here. Not impulsive yet, but we'll see. If I see more impulsive breakout in the dollar, that's going to likely put pressure on just all stocks in general. Okay, so just going back as a reminder, guys, equal weighted triple Qs tech sector down today 0.5%. All right, large cap stocks up 0.5%. There's a major divergence going on between the broad market and a handful of stocks. Okay, that's a very weak rally, all right, to see just a handful of stocks rallying. Now, yes, they are the large cap stocks, but unless you start to see the broad markets rallying along with the leaders, the large cap techs, it's not a strong rally. And then if you look at the S&P 500, down about 0.3%, so the broad market's down in general, and then the equal weighted S&P 500 down over 1%. So this is all about, all we really need to do is flip over to my FANG stocks and just watch these. All right, watch Apple. All right, watch Microsoft. Watch these FANG stocks. These are what's holding the market up. If these start to sell off, there's no strength in the market, as of right now. So I'm going to get the video out there, guys, and best of luck. All right, catch you on the next one. Bye.